So we had a very large rally today after FOMC, which was yesterday. And by the way, I was unable to do a video yesterday. Typically, I do them every Wednesday and Sunday. But regardless, saw a big rally today to close the day all the way up here around 77 on the daily RSI. If you're unfamiliar with the RSI, it's one of the most basic indicators out there, and it stands for the Relative Strength Index. And the basic premise of it, again, there's a lot of nuance to everything in the market, but the basic premise is anything over this line right here, over 70, is in overbought territory. Anything below 30 or around 30 here is in oversold territory. And typically this is a good gauge on when to risk off and potentially risk on, because as you can see in the past, just looking at every time we got around this 30 level, it did prompt a bounce. You can see over here, there's a bounce after we got around 30. Over here, this was a bottom before a large bounce afterwards. Over here, this October low right around this range here, we were oversold or just about oversold, and it continued up higher afterwards, as you can see from the chart. And the same thing would apply as well for the top side. Once we get around this 70 range back here, February 2nd, as you can see, this was a top. We fell about 400 points lower over here in the middle of August, this August 16th date, a major top before going down into October. Also happens to be the same around 77 level that we're at right now, based on the RSI, which is interesting. And actually, this is about 3 to 4 points lower than what we closed at today on the daily chart. So it is close. However, this was even lower than where we're at right now, showing that we're even more overbought now than where we were all the way back here in the middle of August. And actually, the last time we were around this 77 range was all the way back here after this melt up like rally that we had in October of 2021. If you remember that, you can see we did go all the way up to about 77. So we're right in line with where we were during this huge rally that we had between October and November of 2021. And what happened afterwards was we had some form of a correction before we eventually reached that all-time high, followed by more downside afterwards. This initial correction was just about 5%. So typically whenever you see this overbought of a reading on the RSI, you're going to have some form of a pullback afterwards, only a matter of time in that regard. So as of now, we're looking for some type of that pullback from here. It doesn't have to be the exact high before a massive down leg. However, everything right now is showing a lot of overextension in the overall market heading into a quarterly OPEX. So you just need to be careful of some form of a pullback off from this level. And again, this is just one indicator of many that you can use. However, this is fairly consistent over time. You can go back to previous time periods, even all the way back in 2020, where we actually reached all the way around 80 to 81 on the RSI. This preceded a 10% correction afterwards. You can see during this time period, this was 10% to the downside. So every time we get around this 75 to 80-ish range, there's going to be some form of a drop afterwards, and that's healthy. You don't want to see, even if you're a bull, a reading that gets this high up in the overbought territory. You want it to be more healthy. You want those pullbacks, those like minor dips followed by upside, and have higher lows as well as higher highs. That's healthy price action. This over here is not anything that's very healthy. Now, I know a lot of bulls are excited that we have been going up for a while, and most certainly a lot of shorts have been squeezed, especially throughout today and as of the last 2 weeks or so. My best suggestion would be not to have any FOMO as we're this high, because it is likely we get some form of a pullback. Again, I'm not trying to predict that there will be some extended down leg that starts right from up here. However, I am looking for some type of a substantial pullback, and by substantial pullback, looking for something around 4,300 to 4,250 off of here. It can go lower than that, but I'm just looking for that as a base value that we can go to from here. So just with that being said, also want to talk about the VIX today. We did have the VIX close up over about 4.5% on the day, which is very interesting because typically this is inverse to the S&P 500. And the reason that's interesting is because whenever you see volatility up on a day that the overall market is also up, as you can see here, 1.22%, typically that's indicative of one of these being wrong. And my bias in this case would be the market being wrong in a sense, where you see this high upside move followed by a upside move today in terms of volatility. Likely you will see some form of red heading into next week because of this equal upside move in volatility from today. Again, both being green on the same day typically means that one is going to show its true colors very soon. And there can be a little bit of a skewed data in terms of going into OPEX just because you have more supportive flows for something like the S&P 500 as well as tech in terms of the QQQ heading into Friday. However, after that Friday expiration, you can see some some of that support go away, which can form some form of a pullback. And again, by no means am I trying to say this will be the top of the rally that we've been in now for a while. However, I do expect there to be some form of a pullback. And you can even look back to this previous time period from back here, right when we were around the same reading for the RSI, about 80 here. We did have this huge rally that just continuous squeeze day after day, and that was followed by, like I said earlier, that 5% correction. However, we still ended up making a new high afterwards before that all-time high was met, followed by downside. All that I'm looking at right now in terms of resetting the RSI and keeping the market a little bit more healthy here would be some form of this correction. 5% or so would be more than enough for what I'm looking for at the moment. So does it have to happen? No, of course, everything is about probability in the market. However, I'd say that reward is more so to the downside in this case, especially because of how overextended we are right now. But of course, time will tell, and we should see some of this downside behavior for this pullback start as soon as next week. So if that isn't the case, then this could most certainly be wrong. However, again, my bias would be to the downside at least into next week and the following if that didn't take place early next week. So I do also want to look at the dollar here, because one of the culprits for this rally today, beyond just the fact that we saw a major short squeeze for sure today, followed by some technical breakouts, we also saw extreme weakness in the dollar. We saw a hard rejection from this yellow trend line that I've shared in previous videos. And what's key about this is because if you look all the way back here, we actually sold off quite a bit from a supply zone, which is right around the 104 to 105 range from up here, followed by extended downside. And if this level is unable to be reclaimed by tomorrow, which would be the weekly close, then that can lead for a lot more downside on the dollar, which of course, if the dollar has some more downside, that can be more bullish for equities, specifically the Dow Jones, which is why we saw the Dow Jones break a critical trend line today. So I'm very interested to see where the weekly closes here on the dollar. Now, even if the dollar does close below this yellow trend line here, I do suspect that there will still be some form of a pullback in terms of the S&P 500. However, that pullback could prompt some form of a large bounce afterwards. Again, it doesn't have to be an exact top, especially if the dollar continues to fall. If there's some form of a pullback in the S&P 500, that could prompt some form of a bounce later on, but that would be later down the line, and of course would update you guys on that. But this is bearish for the dollar, that it's below this yellow trend line, and we'll see based on the weekly close tomorrow where it kind of wants to go, because if it did close the weekly under this yellow trend line here and it didn't reclaim it the following week, then we'd likely see new lows for this year in the dollar, which would be very interesting. So continue to watch DXY here. And one last thing I want to go over today is the dark pools. Go over this in every video, and this is insane. And I've said it's insane now for over a month probably, because we've been seeing consistent 1 billion plus prints every single day. And not just 1 billion plus prints, we've been seeing over 3 billion plus prints numerous times a week at this point for the past month. As you can see today, we had 4.3 billion in premium at the 437.18 level. So it's been consistent billion plus prints on the way up so far. And this has been the case all the way since, if we go back here just to SPX, this has been the case since we had this consolidation around here, which now seems like it was definitely a buy around these levels. I was under the impression that it was some form of distribution prior to some form of downside. However, that was clearly wrong in this case because we've seen a lot of upside since then. However, I must say, as we've been seeing a lot of these, let's say 3 billion to even 5 billion plus prints over the course of the last 2 weeks specifically, so around this time period right here, I find that exceptionally unlikely. And I know I said it before around this consolidation when it attempted to break out here, but I find this exceptionally unlikely that those are institutions that are buying into this rally specifically from today. Whenever you see this high 430s to now low 440s being over 4 billion in premium, that is insane. And it's super unlikely, again, that an institution would be buying all the way up here after such an extended rally, specifically since around this period where we saw a lot of accumulation in the dark pools. We saw a couple 3 billion plus days, and I believe one or so $4 billion day in terms of premium around this range. That was followed by a lot of upside. Of course, we saw a lot of premium around here, like I just said earlier, but now we've seen a lot around this area in the past 2 weeks. So with everything being super overbought right now, at least in terms of the overall market, along with being super overextended over a long period of time, it just seems like there is going to be some form of that sell pressure right now. Again, time will tell, and we'll have to see here. But just like every time in the past, whenever we got this high up, we did see a meaningful correction afterwards, and institutions are not dumb at the end of the day for the most part. So it's very unlikely that they are going to add into this rally, specifically through the dark pools at such a magnitude of premium as you can see here. But I will reference some other days as well so you guys can see what the dark pools have been showing us. We had 3.7 billion yesterday at 436.75. So do watch this 436 to 438-ish range, specifically from the Wednesday and now today, Thursday print, because if we do get a form of a pullback like I am expecting here shortly, then we are going to be interested to see how price interacts with around this range. So it's going to be critical for bulls to hold that range on a retest, again, 436 to around that 438, and specifically for bears, if they want to have a more meaningful pullback, you're going to want to see us crack below this range from here. So do watch that, mark that kind of area on your charts. It could just be a general 436 to 438.5, let's say, range, but that can provide a nice bias if there's a break below or it's able to hold in terms of bulls favor. So also going back here to Tuesday, we had 4.5 billion in premium. Again, guys, this is insane. I've never seen this much since we've had data now for numerous years on cheddar flow. I've never seen this much premium hit the tapes on a consistent basis, and we saw quite a bit around the 2021 time period specifically, where there were consistent, let's say like 3 billion or so prints, but it was not every single day in this regard. 433.65 is another area of interest if that 436 to 438 range breaks to the downside. So again, over 3 billion every single day for the past couple of days now. If we go back to Monday, you can also see here we had over 2 billion, so not quite as large as the other days, but still 2 billion in normal times would have been a decent print. And of course, we're getting spoiled by such large prints as of recent, but this one was at 429.64. So just been consistent hammering of the tape in terms of dark pool premium day after day after day. Typically that's indicative of distribution if you see an extended portion of a rally like we have right now. So we'll have to see again with time here, but regardless, congrats if you have been able to be long throughout this entire rally, because this is not common by any means. Again, the last time we saw a rally to this extent would probably be all the way back around this October time period, at least just based on how overbought we are in terms of similarities and for the duration of time that it's been. One could argue that this was also pretty extreme here in March. However, the duration of this rally was nowhere near where we have been right now, considering this has been the case since March with just a minor pause here in terms of consolidation. But if you were able to hold throughout this rally, just be very, very careful all the way up here because of all the things that I shared in today's video. And if you're interested in shorting just based on what I said in today's video and your own variables, of course, just be super, super careful, because as of now, the trend still remains up, even though I did reference that there'd be some form of a pullback, or likely would be some form of a pullback leading up into next week or the following. You just need to be super careful when the trend is this aggressive to the bullish side. Look for confirmation. For example, over here, just give a quick example, but you do want to see confirmation below key levels. We know that there's key supports just based on pivots here. For example, from around here, we had a key support that was broken through intraday, had a few retests and bounced above. You want to see a break below roughly this 4,400 level. That'd be a first sign of confirmation, followed by further confirmation if we're able to break down below this level, which was a key retest through volatility, because we saw an uptick in volume here on FOMC day. This is another key level you'd want to see break. If this were to be the case, then we'd likely sell down to around this 4,320 level, which would be the next minor support. But do look for confirmation below, because this can keep going way further than anybody, including myself, can expect, as it has as of recently. So just do be careful here trying to step in front of the trend. And other than that, appreciate you guys watching this video as always, and I'll see you guys next time on Sunday.